Okay, so this is the question that we are starting. The name of the question is worth. So I'm just reading this question for you. The following is a trial balance for the worth after his first year of trading. You are required to prepare a statement of comprehensive income, just making it simple. Statement of this is profit and loss account. Profit loss account. Trading profit and loss account. Okay, for the year ended 30th June 2013 and a statement of financial position as at that date. Okay, so we need to make income statement as well as balance sheet in this question. Okay, so the trial balance as at 30th June 2013 is given. The first thing is sales, purchases, rent is our expense, so let's write rent expense. Heating and lighting, that is again our expense. Salaries is our expense. Insurance is our expense. Land and building is our fixed asset. Fixed and fitting, again a fixed asset. Trade receivables, your receivables slash debtors, these would be considered as current assets. Sundry expenses, this is our expense. Payables, trade payables, creditors, these are the current liabilities. Cash at bank is a current asset. Is anti-capital. Motor vehicle is a fixed asset. Motor running expense is an expense. Capital is a capital. Are we done with the classification? Yes, we are. So now let's start with the income statement first. The first thing that we need to do is write the name of the business, that is worth, 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 and then we will give the heading of the statement, that is income statement. Income statement. I am writing the short forms here, but you need to write full forms. Income statement for the year ended 30th June 2013. I'm starting with my income statement. The first thing that I need to write is sales. I'm ignoring these zeros. So my sales are 28794. 28794. 28794. Now I need to subtract the sales returned. That is not given in the question, right? So right next, I would get my net 28794. This I need to subtract the cost of sales less cost of goods sold. In the cost of goods sold, the first thing that I will write is opening stock, opening inventory. Opening stock and opening inventory both are the same things, right? The opening inventory for this question is not given in the question, I guess. Then I'll add purchases. Purchases are 23,803. Then I will less the closing inventory, for which is given here 4166. In this question there was no net purchases working, so I just need to write net purchases here In like in the other typical questions, I would be getting some more information to calculate the net purchases. So I would show all the workings in the bracket here to get the net purchases, right? So my cost of goods sold for this question would be 19,637. This is my cost of goods sold, and the cost of goods sold would be subtracted from net sales to get the gross profit. Nine one five seven. Now, from the gross profit, I would have to subtract all the expenses in order to find the net profit. Less expenses. Less expenses. The expenses for this question is rent. The first one is here. Rent. You just need to tick mark here so that you do not repeat the expense which you have already written. And then heating and lighting, lighting and heat expense. Then salaries and wages, 3164. And then insurance. Insurance for this question is 105. And then the other expenses, sundry expenses, that is 506. And then another expense, I guess this one, motor running expense. Motor running expense. And this is 1133. Please recalculate this because my working shows the total expenses are 6184 and my net profit is 2973. Please check this working again and do ask me on my WhatsApp or wherever you can message me that if you find anything difficult or anything confusing or any problems you're facing in this question. Okay, I'm just giving you 1 or 2 minutes just to recheck this again and just to check that if you miss out any concept in this question, and then I'll move on to the balance sheet. Okay, take your time. Okay guys, let's start with the balance sheet. So before starting with the balance sheet, our practice should be to write the name of the business first, that is worth, WORTH worth. Then we need to write the name of this statement, that is statement of financial position as at 30th 2013, right? Then we need to write cost here, provision for depreciation here, and the net value here. Okay, so in this format, in this balance sheet, we first need to write the non-current asset. Uh, Okay, so we need to write non-current assets first. A non-current asset is yeah. Our first non-current asset or the fixed asset, both are the same things, right? Non-current asset and fixed assets, both are the same thing, right? So land and building is our first non-current asset. Land and building, 1,000. Accumulated provision for depreciation. So I would write a dash here. My net book value would be 50. So my other fixed asset or my non-current asset is fixed FNF, that is 1,000. Okay, so my other non-current asset is fixtures and fitting, that is 1,000. No accumulated for provision for depreciation in this question, so I would just ignore this and would write the same amount in the net book value part. Then my other fixed asset is motor van. Motor van MV. The amount is 5,500. No accumulated provision for depreciation, so I would write a dash here. And my net book value would straight away come, right? Okay, so these are my non-current. But you are not supposed to write the short forms like LNB, FNF, MP, NCA. You are not supposed to write this. Not even SOFP. You are supposed to write statement of financial position very properly. Okay. Now comes the totaling of this 11,500, I guess. Okay, so now comes the current assets, right? Current asset CA. My first current asset is my closing. We are all known to what is closing inventory is 4166, and then my other current asset would be trade receivables or the receivables. We all know the logic behind, I guess. I've explained everything in the class. This is just a revision video. Okay, so do I have any other current asset? Let me just check. Cash at bank. Cash is my current asset. 3847. Okay. 4166 plus 3166 plus 8347. My answer is 1 1179. This would be added with my non-current asset in order to get total assets. Okay, so now moving on to the capital and liability part. Capital and liability part. Do we have some long-term liability? No. Long-term liability. No long-term liability in this business. And then we'll write current assets, current liabilities. The current liabilities for this business are creditors or payables. Payables are 1206, 1206, and there are no other payables, I guess, no other current liability other than trade payables. So I would directly write in the last column if there would be one more or more than one current liability, so I would have written here and then the total would have gone here. But in this question there was only one current liability, so I directly wrote the totals in the last column, right? Okay, the current liabilities has been done, so now I would move towards the financed by. Opening capital, what is my opening capital? That is 65900. Net profit, add net profit, the net profit which I would get from my income statement, 2973, and then I would subtract the drawings which I withdrew from the business, the investment which I withdrew from the investment from the business, the capital which I withdrew from the business. Any amount which I take out of the business is known as drawings. So my drawings are here 2400. $65,900, 2973 minus 2400, 66473. Plus 1206. 67679. Okay, this is my capital and liability. I've just rectified a calculation mistake which I have made earlier in this non-current asset part. So I'm just changing it. The total is 50,000 plus 1,000 plus 55,000. 5,500. 50,000 plus 1,000 plus 5,500. The answer is 56500. That would be added into this amount, 1179, and the final answer would be 67679, which is equal to the current liability. Okay, there must be a question in your mind that why these two figures need to balance. These two figures need to balance because we follow a simple accounting equation, and the equation says assets is equals to capital plus liability. So in this part we are doing capital plus liability, and in the above part we did assets. Assets includes two things, current assets and non-current assets, right? And liability includes again two things, non-current liability which was not part of this question, and current liability which was only one, that was creditors in this question, right? And we had some more calculations in this part, that is capital. Capital is known as financed by. In the financed by, we typically have three things, that is opening capital, net profit, and drawings. Okay, so this is all for today. I hope you understood this question, and if there are any queries, just do message me, WhatsApp me, or any other media through which you can be connected with me. You can. Okay, thank you.